Today, we're breaking down how a 100-year-old Japanese industrial giant, Asahi Kasei, is planning this massive trillion-yen pivot to completely redefine its future. We're going to get into how they're shifting away from their old foundations and placing a huge bet on the high-growth, high-tech markets of tomorrow. So you have to ask, why would a giant company that's been around for a century need such a dramatic change? Well, it all starts with a plan that didn't just miss the mark, it pretty much hit a brick wall. It was a huge signal that the old way of doing things just wasn't going to work anymore.
And you can see the problem clear as day right here in the numbers. The company's previous plan was aiming for an operating profit of 2,700 billion yen. The new forecast? Only 2,000 billion. That's a massive 700 billion yen gap, a serious warning sign that something was fundamentally broken.
So where did things go wrong? Well, their housing business, which has always been a solid performer, did pretty well, hitting 96% of its target. No major issues there. Healthcare, which was supposed to be a big growth area, kinda lagged, only hitting 73%. But the real problem, the main thing dragging everything down, was the materials business. It only managed 63% of its profit goal, and that really exposed the core issue. And it all boils down to this. The company was just way too dependent on the unpredictable boom and bust cycles of commodity chemicals. These are basic materials where prices swing like crazy. This part of the business wasn't just underperforming, it was actually losing money. It was a huge structural weakness in their whole profit model. So, in response to that, Asahi Kasei didn't just make a few small changes. Nope, they went right back to the drawing board and came up with a whole new philosophy. And this is the engine that's going to drive their entire transformation. They're calling this new strategy diversity times specialty. So let's break that down. Diversity is all about their stable foundation, the wide range of businesses, tech, and financial muscle they already have. Specialty, on the other hand, is their new focus, creating these high-value, super profitable businesses that go after very specific niche markets where they can really compete and win. It's about using their size to get more nimble and focused. And this creates what they're calling a virtuous cycle. Think of it like this. The stable, diverse businesses, the ones that are already making money, provide the cash for bold investments in these new specialty areas. Then, these new specialty businesses create high-value stuff and generate really strong profits. And those profits, they get plowed right back into the company, strengthening that stable foundation and kicking off the next wave of growth. It's this awesome, self-sustaining loop of innovation and stability. Okay, so that's the philosophy, but how does it actually turn into a concrete plan? Well, the strategy plays out as a three-pronged attack, and each of their main business areas gets a brand new mission. First up is healthcare, and their mission here is crystal clear. They want to tackle unmet needs. What that means is they're not trying to jump into already crowded markets. Instead, they're zeroing in on developing cutting-edge medicines and medical devices for really complex conditions where there just aren't good treatments yet. Think immunology, kidney disease, and critical care. And their strategy here is super aggressive. They're basically on a shopping spree, buying up innovative companies to build a global portfolio and fast. They bought Veloxis for transplant medicine, Binova for biopharma manufacturing, and just recently Colliditis, which has a really promising drug for a rare kidney disease. It's a very clear strategy: buy the expertise and speed you need instead of trying to build it all from scratch. The numbers really tell the story here. Healthcare is meant to be the main growth engine. The goal is to add over 360 billion yen in operating profit by 2027. And almost all of that is expected to come from pharma and life sciences, which are powered by all these new acquisitions, and from their critical care business. All right, let's move on to the second prong, housing. The mission here is to provide a rich life through top-notch homes. They're taking decades of know-how and applying it in this really interesting two-front strategy that looks completely different depending on where you are in the world. So, back home in Japan, where the market is pretty mature, the focus is all on value and being profitable. They're building bigger, higher-end premium homes under their famous Hebel House brand, and even getting into real estate development.
But then you look overseas, especially in the US and Australia, and the strategy is just pure pedal-to-the-metal growth. They're buying up local builders and rolling out their super efficient, industrialized building methods to expand like crazy. And their ambition for this is just huge. Overseas housing is being set up as another key growth engine. Get this, they plan to grow operating profits from 122 billion yen to 330 billion yen by 2027. That's way more than doubling their profits, and shows you just how serious they are about expanding internationally. And that brings us to the third and final prong of the attack. This one tackles the materials segment. Yeah, the one that was causing all the problems. This division is going through the most radical reinvention of all, with a new mission all about sustainable solutions. This chart just perfectly shows that pivot in action. They are making a massive, deliberate shift. They're actively shrinking the volatile commodity chemicals business, projecting a profit decrease of over 113 billion yen, and they're taking that focus and all that capital and pouring it into high-growth areas. We're talking a projected 60 billion yen profit increase from electronics for things like advanced semiconductors, and a huge 123 billion yen increase from energy and infrastructure for stuff like EV battery parts and green hydrogen. It's a direct, dramatic pivot from the old business to the new. Okay. But a transformation on this scale, it doesn't come cheap. The amount of money Asahi Kasei is planning to pour into this over the next 3 years is just staggering. And it shows you exactly how serious they are about this reinvention. That is the number, 1 trillion yen. To put that in perspective, that's somewhere around 6.5 billion US dollars. It's a colossal amount of money they're betting on this new strategy. It's a clear signal to everyone that this is an all-in move. So where is all that cash going? A full 2/3 of that trillion yen, about 670 billion, is specifically for strategic growth. This is the rocket fuel for the whole plan. It's mostly going to fund more acquisitions in healthcare, that big expansion in overseas housing, and building out the capacity for their new high-tech materials businesses. The other third will just go toward maintaining and upgrading what they already have. So what's the big payoff they're hoping for? Well, by 2027, the goal is to finally hit that 2,700 billion yen operating profit target, along with a solid 9% return on equity and a 6% return on invested capital. But honestly, the real goal is to create a fundamentally different, better company, one that's more resilient, that isn't tied to those volatile commodity markets, and that is focused squarely on the growth industries of the future. When you step back and look at it, this whole 1 trillion yen plan is a bold, high-stakes bet. It's a wager that Asahi Kasei can take its century-old foundation, all that diversity and industrial power, and use it not as an anchor to the past, but as a launchpad for a brand new era of high-tech, specialty-driven innovation. Whether a 100-year-old giant can really buy itself a new future? Well, that's the big question.